Shipping giant Maersk is facing work stoppages on both land and sea. It stopped accepting certain Canada-bound cargo as that country is less than 48 hours away from a rail strike, while U.S. port workers are threatening to strike next month. Maersk saying that if that happens, a one-week shutdown could take 6 weeks to recover from. Joining us to discuss and the pricing risks is Lisa DeNight, Newmark's National Industrial Research Managing Director. Lisa, it's good to see you, and we are not out of the woods yet on all of these issues that many, seem to associate more with the pandemic era. Why not?
Yeah, that is such an interesting point. It's another moment for us to kind of take a step back and realize the critical importance of some of these infrastructure and freight transport modalities. It is very clear that a strike is likely to happen this week with Canadian rail firms. And I would say the good news is that history shows these Canadian rail strikes are relatively short-lived. That being said, there are cascading impacts for North American manufacturing sectors, for agri-food. These Canadian rail firms, for example, have a significant impact on grain shipments. And especially as we come up on a harvest season, critical crops can't just sit around.
It's interesting. We were just having this discussion with a farmer from the Iowa area. So what are the knock-on effects we should expect beyond maybe grains, like you said, that industry in particular? What else in terms of the U.S. impact, the way it might affect consumers as well as businesses?
Well, luckily, as I said, these are typically, even in recent history, Canadian rail strikes are typically short-lived. So I anticipate the impact will be much more acute in Canada and less so in the United States. That being said, it really depends on the duration during which a strike would go on. If a strike were to last more than a few days, which is what recent history has shown, that could have a lot of implications on a wide variety of industries. Manufacturers could have to idle plants or furlough employees if this does not come to a quick arrangement.
Sure.
That being said, I think there's a lot of encouraging history and there's a lot of incentive to not have this wage on.
As for the U.S. One, which it could be when their contract expires next month, I think a lot of retailers and suppliers have perhaps anticipated this strike coming and been front-loading a lot of their deliveries for the back to school and even for the holiday seasons. Is that right?
Yeah, so we're now kind of bringing in the whole port issue. So already, this Canadian rail strike issue has led to shippers diverting seaborne cargo for U.S. consumers to non-Canadian ports because of rail issues, but rather to ports like Seattle or Southern California, which is already causing a little bit of congestion on the rail lines in Seattle, for example. That being said, we are experiencing this within this period where we're facing another potential labor crisis next month, as you say, when the East and Gulf Coast Port Union contract expires at the end of the month. And that rhetoric is sounding potentially like there could be a strike there as well.
Yeah.
It is causing a lot of these goods to be brought in ahead of time, leading to quite a heavy peak shipping season right now.
What is the net effect on pricing? Is that where the rubber hits the road, or is it likely to be in some kinds of delays? I mean, it has to come down, I imagine, to the kinds of markups that we used to experience more a couple of years ago.
Well, luckily, we have around 4 years of history behind us now, and industrial occupiers and shippers have taken great lessons from the past 4 years and have diversified their industrial operations. We now have more warehouse and distribution nodes in more strategic markets and gateways across the country, and a wider variety of different transport modes. Industrial occupiers really need these levers of optionality to pull when something like this happens. So I think the net impact will be less severe on the, let's say, inflation or prices than it would have been, let's say, 4 years ago.
Absolutely. We can only hope, while it all gets resolved smoothly, that there's not going to be a knock-on inflationary problem to deal with as well. Lisa, thank you so much. Lisa DeNight with Newmark.